Switzerland faces a critical challenge as it strives to resume negotiations with the United States following the imposition of exceptionally high tariffs that threaten to cripple its export-driven economy. The Swiss Confederation's president, Karin Keller-Sutter, along with Economy Minister Guy Parmelin, recently concluded discussions in Washington, D.C., where attempts to secure a favorable trade arrangement fell short. But here's where it gets controversial. The new tariffs, set at a staggering 39%, are some of the steepest under the Trump administration's global trade overhaul. And they have already taken effect, risking deep economic repercussions. The timing was midnight Washington time, 4:00 GMT, when this hefty import duty kicked in. Swiss representatives rushed to negotiate a reduction, but were unsuccessful in their last-minute efforts. This tariff is poised to significantly restrict Switzerland's access to the U.S. market, which is a crucial destination for iconic Swiss exports. From luxury watchmakers like Swatch, Rolex, and Patek Philippe, to premium food products such as cheese and chocolates. And this is the part most people miss. While Swiss pharmaceutical exports, dominated by giants like Roche and Novartis and valued at $35 billion last year, are currently exempt from this 39% levy. The overall impact could still ripple across the Swiss economy. President Keller-Sutter described the situation as extraordinarily challenging for the affected businesses and their workforces during a press briefing after an emergency meeting of the Federal Council, Switzerland's executive government consisting of 7 members. Despite traveling quickly to Washington, she left without securing a deal, having not met directly with President Trump or his key trade officials. According to insiders, Swiss proposals to reduce the tariff rate to 10% were flatly dismissed. Swiss lawmaker Damien Cottier, who chairs the Swiss-U.S. parliamentary group, holds on to hope. We've seen in other contexts that President Trump's stances can shift. It's crucial we keep negotiating and making our case, which is strong. Yet, many experts view this tariff imposition as unusually harsh. The wave of tariffs affects multiple countries that couldn't finalize agreements with Washington, and U.S. importers began paying these duties on Thursday. Trump claimed on his social media platform, Truth Social, that billions of dollars will start flowing into the U.S. from nations he accuses of exploiting American markets for years. Switzerland was taken aback by the decision, because the duty rate they face far exceeds those struck by the European Union, Britain, Japan, and South Korea. Addressing the shocking headline splashed across the Swiss tabloid Blick's front page, 39% in bold black print, Manfred Elsif, director of the University of Bern's World Trade Institute, called the tariffs insanely high. He criticized Trump's fixation on trade deficits in goods, pointing out that such short-sighted policies risk souring relations with long-standing allies, which could have broader geopolitical and economic consequences. It's important to note that Switzerland had removed tariffs on nearly all imports by 2024, effectively opening its markets almost tariff-free to U.S. products. This makes the U.S. administration's focus on Switzerland's substantial trade surplus, valued at 38.5 billion Swiss francs, $48 billion last year, even more contentious. Industry leaders and economic analysts warn the tariffs risk serious fallout, damaging growth prospects, threatening jobs, and possibly nudging the Swiss National Bank toward reducing interest rates in the near term. Hans Gersbach, an economist from the KOF Swiss Economic Institute at ETH Zurich, projects that if the tariffs persist long-term, Switzerland's GDP could shrink by 0.3% to 0.6% over the next year. While he does not foresee a recession, he does warn that economic growth may stall, pushing the country towards stagnation. The Swiss business community has urged the government to persist with dialogue and negotiations. Jean-Philippe Kohl, vice director of the industry association Swissmem, expressed dismay, calling the situation completely stunning and fearing this marks a potential death knell for Swiss exports to the U.S. Most companies, however, remained cautious on Thursday, opting not to publicly speculate on the tariffs' consequences. Even so, some industry figures see the tariff announcements as a strategic play. Zurich Insurance CEO Mario Greco, commenting while releasing his company's half-year financial results, suggested the tariffs could be part of a larger game plan by the U.S. to create market uncertainty. Meanwhile, despite the economic strain, the Swiss stock market responded relatively calmly. The Swiss Blue Chip Index rose 0.8% by mid-morning GMT, aligning with broader global market trends after having dropped to its lowest point since April earlier in the week. The Swiss franc strengthened slightly, which led to a minor decline in the dollar against the franc. Market watchers like IG broker Chris Beauchamp interpret this lack of market panic as a sign that investors still hope for a diplomatic resolution in the coming weeks. But here's the question for readers. Could these punitive tariffs be a short-sighted trade tactic that ultimately damages alliances? Or are they a justified move to address long-standing trade imbalances? What do you think? Are the Swiss right to continue negotiations, or should they consider more assertive measures? Share your thoughts below and spark a conversation on this unfolding trade drama.